I'm Greg Hunter. Welcome to USAWatchdog.com. With us, one of my regulars, one of my favorite guys. We're actually turned into being friends here. But I don't put him on because he's my friend. I put him on because he's been right and he's smart. And he's made a lot of good calls. Last week in the Weekly News Wrap-Up, I said, I talked to Gregory Mannarino, tip-off, spoiler alert, Gregory Mannarino about the market. He says, man, listen, he tells me on the phone, the whole thing, the stock market is topped out. It's done from here. It's really, I've called it already a few days ago. It's topped out. What happened? All the gains of 2015 have been erased. Pretty good call. I'm talking about my friend Gregory Mannarino, of course, who's at traderschoice.net. Gregory Mannarino, thank you for joining us today on USAWatchdog.com. Tell me why you made this call, why you think the stock market has topped out. Sure enough, you were right. I mean, long term, we'll find out, but you're looking pretty right now with all the gains erased. Why did you make that call?
Well, first of all, thanks for having me on here, Greg. I appreciate it. This is what's going on here. A lot of things. But that particular call I made was based against the Dow Transports. I happen to believe in Dow theory. Dow theory is pretty straightforward. It boils down to this. If manufacturers are making money, they're going to increase production. And if they increase production, they're going to have to ship these things. So you would expect that the transports would need to be rising along with the equity market or the stock market. We're not seeing that at all. There's an absolute disconnect. There's a divergence. We had a consolidation several months earlier, and the Dow Transports have begun a clear leg down here. And unless something dramatic happens to bring the transports back up, this bull market is over. And yes, we have seen all the gains disappear for 2015. And I'm not saying, I don't want people to walk away from this and say, oh, that means the stock market is going straight down from here. No, it never does that. It never goes in a linear fashion anyway. It's always a random walk or a random walk down. So we could see bounces here and there. But again, unless the Dow Transports resume an upward sustained trajectory here, we are at the end of this Federal Reserve-induced capital misallocation, distorted stock market.
So you're saying if shipping is not growing, the Dow is dying?
Absolutely. That's Dow theory. I happen to believe in Dow theory. It just makes sense to me. So, with that said, and with pretty lofty people talking about valuation in this market, Janet Yellen herself talking about valuation in this market, something has to give here, Greg. And the market right now is not just being pressured by the Dow Transports, which again are in a clear downward trajectory at this particular time, but we're seeing more action here in the bond market that's very troubling. And the mainstream is playing this. They're playing this up. And I want to dispel this myth right here and now on your show, Greg. What we have here, we're seeing the yield on the 10-year especially, and this is the benchmark. Everyone watch spike. Today it's 2.42. So that's significant in a short period of time. But what the mainstream is trying to do is saying that it was this strong jobs report that's forcing these yields higher. Now, to dispel that myth right here and now, several weeks ago, we had the same action before this supposedly strong jobs report came out, so it's not true. They're just trying to spin it, Greg. What we have is something that you and I have discussed many, many times. This is the free market, just trying to determine fair market value. And when this all comes down, Greg, forget about it. Forget about it. It's going to be a moment, and all assets will correct.
I want to move on because in our pre-talk you said that, we have lots to talk about. And this is like yesterday, a day before, you said, how I was booking you, said, hey, you got lots to talk about. And I'm thinking, yeah, we do have lots to talk about. So when I read the paper, this is yesterday's headline about the G7. The G7 is over there now. The Bilderberg folks are going over, kind of dovetails in. But when I read this headline, I thought, you've got to be kidding me. And I just want to hold it up for you here. And it says, it talks about how the G7, the headline, this is an AP headline. It's talking about how they're worried. They want to end the use of fossil fuels by the end of this century. Excuse me? You mean to tell me that you're worried about what's going to go on 85 years from now when you have the Islamic State and you have people, drowning in the Mediterranean trying to escape Libya, and you have, the Greek, debt crisis, which doesn't look like it's going to end well. You have, strife and continuing big problems in the Ukraine, the South China Sea. You're telling me that the big headline is you want to stop using fossil fuels at the end of the century, 85 years from now? You have got to be kidding me. They're in la-la land, or this is just more of the press spinning a story and trying to, don't look at that terrible bad stuff. Let's talk about fossil fuels and ending them 85 years from now. Let's talk about the bad stuff. And I know your wheelhouse is the geopolitical. It is the financial. And they're trying to paint this story that, if Greek leaves, the euro, if they default, it's not going to be, all that bad. What say you?
Well, first of all, going back to that particular story, it's asinine that they're going to predict what's going to happen in 85 years from today, when most people who are watching this video today will be dead. Okay?
Yes.
Come on now. I don't even know what to make of that. They're going to throw whatever they can in front of people's faces to make them distracted, to say, look over here, don't look over here. This is the classic, the classic thing. They always do this. So forget about it. It's so irrelevant that whoever wrote that story and put it out there should be fired. I mean, it's just too dumb. Why they would even, try to make people... Again, it's all part of the propaganda machine that we're seeing. Because, Greg, look, the issue with Greece and all the stuff that we've been talking about here for a very, very long time, it's happening right here and right now. These riots here in the United States that we spoke about, the strife around the world, the wars breaking out, what's happening in China, all of this is the collapse in motion as we are moving forward here. Greg, it's a perfect storm. All the pawns are in place right now. It's just a matter of time before this entire thing really comes down rapidly. So you still have the financial pundits and the mainstream talking about good economic news, how we keep moving forward. Really? Well, how about this mainstream media, whoever you may be listening to this? We have a money velocity at a near 4-decade low. How can we have any kind of an economic recovery if cash is not moving through an economy? There you go. So that just really, you can't have it, Greg. I know you get that, and I would imagine your listeners do. But that's it. This is all farce, and they're going to do whatever they need to do to put whatever asinine news story in front of our faces to keep you distracted.
What's your take on the Greek thing with them bundling this debt, and they missed this IMF payment? Now they kicked the can down, I think, to the end of the month. I mean, you don't really know. The reporting's so terrible. I mean, after all, the big story is, what's going to happen 85 years from now when we're all dead. But what do you think? Which is a good point you made. So what do you think about this Greek thing? Could that be one of the many... we can call it a black swan because we know what's going to happen. One of the many hiccups that could happen, disasters that could happen, and could they get this thing pushed off to? I think they'll push it off to the fall with that last tranche. They're going to buy time. They got 7.2 billion euros sitting there. They're not going to just leave that on the table and let the economy collapse, are they? I mean, aren't they going to find a way to give that to the Greeks to try to buy a little more time?
Absolutely. I think there's a dangerous game of poker being played here with regard to that situation, and we're going to see who blinks first. I believe that they will continue as hard as they can to kick this can down the road. But again, look at what's happening in the market right at this moment. The interest rates are rising here and rapidly. So this can play a big role here. But I think the main issue with Greece is they're afraid of a contagion scenario here. They don't know how this is going to play out. Greg, we've never been here before, never. So you can have financial pundits and mainstream outlets talking whatever they want to talk about, how scenarios in the past have done this. We've never seen one like now, where we have zero interest rate policies for so long, massive distortions in this market, a debt bubble, which is the greatest threat to humankind, period, the end. Distractions and propaganda in the mainstream and everywhere else. Greg, we've never been here, so there's nothing to compare it to. And I think that's the main fear here as we move forward.
You said they would do crazy things, and everybody thinks the QE is over. I mean, after all, the Fed, says it's not. Of course, a lot of folks say it's covert. They continue to do it. Interest rates have been held down. Your point, I say this all the time, you can't just say you want low interest rates. You have to do something. Your point that you've made several times. You have to do something. Are they going to do something to try to kick this can down the road and have overt QE coming up? Do you think that is on the on the not so distant horizon?
Well, let's put it this way: if interest rates continue to rise on their own, if the free market continues to do what it's trying to do right now, the Fed is going to have to act to quell that. So yes, they not only are, as we speak, Greg, doing a backdoor quantitative easing by requiring banks to buy debt, by printing cash in the thin air at a blinding pace. All they have done is transferred this onto the backs of the banks. They're keeping off of their balance sheet, putting it onto the backs of the banks, and therefore exposing shareholders and depositors to this toxic asset. So again, this is a major thing as we move forward, and we all understand the financial system is really on a knife's edge at this point.
What do you think will happen if they do overtly or covertly? And I don't know which way it's going to swing yet. You say they're going to do something, and we don't know whether it's going to be, hey, y'all, look at what we're doing. We're buying bonds and keeping the system safe and keeping the economy going, or they're going to do it covertly, like the Belgian bond buying or whatever other machination they come up with, funnel cash into the system. What do you think happens though when they come out and people know, whether overtly or covertly, they know that they're printing money again, that we're into QE4? What happens to the dollar? Does everybody go, oh, great, yay, stocks go up? Or is it sell for the dollar and treasury bonds and everything else? What happens, do you think?
Well, I think if the Fed does do this, which I believe they're going to have no choice at one point here, it will put pressure on the dollar. Look, all this we talked about it, and then all this speculation that we've seen lately with the dollar, and I called the top on the dollar too, almost to the day. How's that? I did that too. I said that all that speculation there was people believing the Fed was going to raise rates soon, which they're not going to do. Period. So we will see. The Fed is going to have to do something. We're going to see this dollar action. The dollar will weaken here. It may continue on a downward trajectory. We've seen this before in history. There's no doubt about it with regard to the U.S. dollar. And we're going to see metals rise. Again, that's another thing. I said we had hit the bottom in metals as well recently, and it looks like that's the case as well. Look, it's not really a hard puzzle to put together. But these central banks, Greg, and yes, they're still going to pull things out of a hat that we can't even dream of yet, because the alternative is too horrible. The alternative is the debt bubble bursting, which is not just a financial problem. This is a resource issue. This is why we're seeing wars break out, why we're seeing riots here in the United States, and this is going to get much worse as we move forward.
Christine Lagarde came out ahead of the IMF and was chiding the Fed, don't raise interest rates. I mean, she came out and said it. Just like you have been saying, they're not going to raise interest rates. They can't raise interest rates. It'll blow up. They can't do it. Sure enough, Christine Lagarde, you're a pretty good company, head of the IMF, saying the same thing you are. Maybe she watches your show, traderschoice.net. I don't know. But when we get into this rising interest rates, where at some point, isn't the Fed going to lose control of interest rates? Is it going to be a point where no matter what they do, the market's going to reprice it? Or am I wrong?
You are absolutely right. I mean, you couldn't be more right. This is what I've been screaming from rooftops, Greg, for years now. I don't care what actions the world central banks try to do. It's not going to matter, Greg. I urge people to do a little research into this right now. What we have here is an environment involving the most gargantuan financial bubble that has ever been seen in the history of the world. Now, what we know about bubbles is this. Again, I urge people to do their own research. I've been yelling about this for years as well. Every single one, without exception, bursts. They burst because they rise above a level that can be sustained by any means. By any means. So what that means is, despite whatever the central banks are going to try to do to suppress interest rates, to keep this whole thing pushed up, it will be the free market that dictates fair market value, Greg, and that is going to be that epic snapback moment where all assets across the board, debt, currency, metals, stocks, correct to fair market value. It is going to shake the core of the earth when that happens, Greg, and it's going to be nothing but a wealth transfer. People that have exposure to this market on the long end, 401ks, retirements, their wealth is going to be transferred simply from their pockets to another group of people. That's all that's being set up right now. That is it between the world central banks and the Wall Street banks and all the banks. This is it. This is the setup. This is how they understand how it's going to be played out. Look, the corruption here is so extreme. We've never seen anything like this before with metal manipulations, currency manipulations, banks that continue to get brought up on charges, yet no one goes to jail. All they do is, you've talked about this so many times, Greg. It's unbelievable. Fraud to such an extreme, it is frightening.
What do you make of the two, being you brought up the banks, the two Deutsche Bank's co-CEOs? That's it. We had a contract till March of 2017, but we quit because they had some fines over LIBOR or whatever, which is paltry when you consider they had a few $1 billion in fines, or I don't know, not that much. I mean, when you consider that Deutsche Bank has, what, 75 trillion in derivatives? What do you make of their, untimely departure? They just, both CEOs just go, we're throwing in the towel, we're done?
Here's the issue with that, Greg. The financial system, the entire thing, being that it's not backed by a real asset at all or anything, is built on trust. Trust that the system will work. And the banks are well aware of this, and they are exploiting it. This is why no bankers are brought up on charges, why no one gets handcuffed, no one gets arrested, because it would shake the very foundation of the financial system, which is built simply upon a trust mechanism. That's it. So the banks, the bankers, all of them will get away with whatever they can rig everything, and they are, and they will not get in trouble for it. Period.
But what do these guys leave? What do you think they leave? Is that a sign? Is that a tip-off? Is that do you see that as a sign that this is another warning sign that ding 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 ding, things are getting close? Or am I just being engaging in fear porn?
No, absolutely. But not only are things getting close, but again, we're here now. We're here now. This is it. Despite whatever is going on here, look, with the distractions from things that are going to happen possibly in 85 years, whatever's coming out of the mouths of the mainstream media and those financial pundits out there, the collapse is now. Look around the world. Look right here in the United States here. Look at what's going on. Despite action from world central banks, which are unprecedented, we are still going nowhere. I believe that was the title of our last interview. The economy is going nowhere, and the proof simply is in the money velocity, Greg. And I'll tell you what I think is going to happen here, and I've been saying this for a very, very long time. The issue with the money velocity, and the reason why we're not having a massive, one of the reasons, because it's multifactorial, why we're not seeing massive amounts of inflation is because the cash is not moving. Once cash starts to move, and it will move, Greg, and I'll go over a scenario right now of how it will, all of those extra bills that have been printed out of thin air or added to a digital screen are simply going to chase the same amount of goods. You do not need to be a rocket scientist to figure this out. Now, the scenario where cash will start to move, is not going to be a pretty one. We're going to see, again, the debt market. We're seeing all these rumblings in the debt market, the bond market right now. Cash will leave the bond market, pushing yields higher. Very simple. And the scenario is it puts pressure on equities. Again, it's a reverse of what we see now, inflating the super bubble here, the super bubble in debt, super bubble in stocks. When all that cash starts to move out of these markets, it's simply going to look for a place to go, Greg, and it's going to go into commodities. Now, as this is occurring, all of these bills that are digital or otherwise that are around the world, and people see the currency start to drop precipitously, are going to come back here to the United States as well. So we're going to get this scenario, again, where massive amounts of bills or currency are going to chase the same amount of goods, Greg, and whammo, there's the inflation.
You know more about this than I do, and I have to simplify it because I'm not this smart. Everybody on this on my channel is, when you see me and somebody else, they're always smarter. You're included. No. But if you got this 2% or 1.7% right now, it's 2.40. But a lot of stuff got sold at 1.7, 1.8% 10-year Treasuries. And if these bonds go up to 2.4, 2.8, 3, 3.4, as they go up, Aren't these bonds used as collateral, as an asset? Doesn't that destroy their collateral? And I guess what I'm getting at, can't banks, if they're leveraged up 50 to 1, they lose 3 or 4%, doesn't their capital base get wiped out? Are we going to see inflation, to your point, and also deflation, banks going out of business? Couldn't that just drive these guys out of business? Isn't that what they're really worried about? Because they're not just worried about whether or not you get a car loan for 8% or 5% or 3%. They're worried about the banks, aren't they?
Yes, Greg. And that brings up another point here, going back to what we saw in 2008. All of this debt here is guaranteed by other entities here. It's called a credit default swap. Okay? Now, in this kind of a scenario, no one is going to be protected. Greg, this is it. This is why the entire system cannot stand here. It can't do it. And when the free market begins to, when it's trying to do right now, to determine fair market value, and it will, this is a mathematical certainty. I can't imagine how anyone could be on the opposite side of this and believe that the free market will not win over the long run here. When this happens, all of this, including all of the derivatives associated with it, will correct the fair market value. Greg, the system is fake across the board, and we're going to get to that moment, and we're seeing it unfold now. And I can't stress to your listeners here what lies ahead and how devastating this is going to be. It's so bad, Greg, that again, this bubble in debt is a resource issue. And I have no doubt that when those resources are not available, they will not be available to millions upon millions, of maybe hundreds of millions on a global scale, that these people will lose their lives. This is why this is so desperate, Greg. This is why they are so desperate to keep this propped up, to keep it buoyed, because the alternative to all of it is too horrible to contemplate. But it's coming. They realize this. This is why we are one nation under surveillance. This is why we are seeing the police being militarized in every state in the union. They have been well aware that this scenario is going to unfold, and they're well prepared for it.
One last thing. I just wanted to kind of touch on, last time I had you on, I asked you about, and I think you're right about it, it's an unfolding thing and it's just picking up speed. Rather than an event this fall, is it going to really kick into work drive this fall? I mean, you've been leery about a call on that, and probably because people attack you, people go after you, but it just seems to me, and a lot of people out here that are pointing towards this fall, everything from the theological to a lot of numbers guys are saying, this fall. I mean, I don't see how it lasts. I personally don't see how it lasts. That it doesn't really pick up some real, that where everybody notices that that people are going to be worried about Caitlin Jennings. People are going to be worried about FIFA.
Exactly.
That people are going to be like, what? It's going to hit home, and all these superfluous stories. Maybe we can stop using fossil fuels by the end of the century. What? I mean, is that the moment that it's going to pick up speed, where the herd is going to realize, we're surrounded by jackals?
Greg, it could happen as we are doing this video right now. We are at a tipping point. There's no doubt about it. Again, look at the stock market. Look at the Dow Transports we went over before. Look at what the bond market is signaling to us. With salvo after salvo, it's a warning. These are warning shots across the bow of this entire global economy. Because this whole thing, Greg, it's a debt-based economic model. This is what we have here. It's based upon the relentless acquisition of debt in perpetuity. It cannot stop. Once we admit that we cannot continue to add debt to it in greater and greater amounts, we have a crisis. Remember the European debt crisis? How did we have a European debt crisis? Because they said they couldn't borrow anymore. Well, guess what? They've borrowed much, much more. This is it. So this is how this whole thing ties together. We are at the end of this. Look, this system is done. It started to die, believe it or not, the moment it was adopted. When we went away from a sound money system to this debt acquisition system in perpetuity. Although it was prosperous for some, it stole wealth from everyone else to keep those some, that very few, that 1 or 2%, very, very wealthy. Now, that system is about to come down. Now, let me just say something else so people can get another handle on what's going on here. We have a moment in this U.S. stock market, playing into what my call about the top of this market recently, where we have a margin debt at a record high. Margin debt is the amount of cash that people are borrowing to stay into this market. Meanwhile, and I just checked it right before we started doing this video, traders continue to bet against this market at better than 2 to 1. It's a very dangerous scenario, because think about why. All of these individuals, institutions too, whatever, are leveraging themselves into this market, borrowing. Okay, so what's going to happen? If we get a rapid sell-off, everyone is going to run to the door at the same time, Greg, and there may not even be anyone to buy on the other side. So we could see a market drop, and we will, that is going to make people's hair fall out. It's going to be epic here, but it plays into everything that's going on. Record margin debt. Whenever we have seen this prior to every single bubble, well, we've never been as high as we are now. Bam, we come down. So this is the scenario, Greg, and we're here now. There is no doubt about it.
A great point about the European debt crisis. They had a crisis. Why? Because they said they couldn't borrow anymore, and they stopped the crisis by borrowing more money. Excellent idea. I'm going to have you on at the beginning of next month, because you've been saying all along, watch the bond market. Forget the equities, forget everything else. We want to see your real tip-off. Watch the bond market, correct?
Absolutely, Greg. That's it. That's
Gregory Mannarino. Go ahead. Finish up.
No, that's it. That's where the Federal Reserve and the world central banks have chosen to manipulate that part of the market. It's the largest part of the market. It's where everything is based on. The price of everything is based on debt. Again, this is a debt-based economic model. It's not wealth-based. So when you have action there in the bond market, it's going to bleed off to every single asset class, not just stocks, Greg, but currencies, but housing, and every single thing in between. Precious metals are unbelievable. This is how devastating this is, Greg, and people don't have, most people, maybe your listeners here, have a clue about what lies ahead, and it is ugly.
One last question. Some people say, well, if rates go up, won't gold go down? And you say?
No. But again, let me just lay this out real quick. It's such a simple scenario, and we're seeing it unfold here now, right, with the rumblings here in the bond market, Greg. When people are running out, when cash is leaving the bond market, yields will spike. That will put pressure on equities. All of that cash, Greg, does not go to money heaven. It simply is going to look for a place to go. It's going to go into commodities, in my opinion, because they are real. So we're going to see just wealth move into those types of assets, and they've been so suppressed. Again, this is how this is going to play out, in my opinion.
Gregory Mannarino, TradersChoice.net. Gregory Mannarino, thanks for joining us today on USAWatchdog.com. I'll have you back on early in July. Gregory Mannarino, thanks again, buddy.
Thanks, Greg. Appreciate it.